Alrighty, folks. We are back for a new trading week. Sydney, Tokyo with SPDas, Elliot Wave Theory Trader. We're just going to go ahead and get right to business here, get started. I'm going to pass the microphone over. SPDas, the trading floor is yours. Take it away.
All right, thank you, Igor. And
Thank you.
it's actually going on around, and let's get started off. Hello and welcome everyone for the first session of the week, Tokyo City Overlap, and as the daily portfolio USD trading that like to do every session from the beginning of the day. Let's get started off with the daily wave targets here. It's a lot happening, some noises, but I would still say the charts are telling us a good story here. Just came in around 15 minutes and had a quick look across major charts. It's going to be interesting to analyze what's going on, including the points. That is the minor larger degree count. For those who have been short in gold, there is some opportunity there as well. I'd be booking some profits just in a moment. We'll be touching base with the euros and the dollar index first. And most of them might have already booked some profits in gold, I believe. All right, that is the larger degree count. We are not changing anything. The charts are still absolutely uh, telling us the same story as we have been discussing in the past 2 weeks. The only thing that has happened here is on the hourly chart. We need to get to that action very quickly, but before that, the 5 wave up remains intact. 3 wave down also remains intact with 1.0177 lows, and it is still uh, projecting a 5 wave higher rally. All right, from where the prices are trading right now. So we will be doing a recount, recalibration uh, of what we left. Actually, it's still within the vicinity of what we've been doing. All right, let me be quick. And in fact, there's a good trade opportunity coming right across the screen as I speak. But let me just complete the counts first. Sit tight and enjoy, and be ready for the first trade of the day, of the week, possibly of the month. At least I am excited of what I'm seeing on the charts. Maybe there is some panic across the board, but it's not there on the chart yet. Okay, so we've got 5 up and 3 down is all complete. The only thing that has happened, if you remember, we've been quoting the 3 wave decline, supposedly forming a bottom around 1.0300, correct? Instead of that, it has dropped another 50 points lower. That's the only thing that has happened over the weekend with the fundamental noises coming out. And I always keep on saying that these noises are just trigger for us, and they are the ones who provide opportunity. So let's be objective again, because that's what is going to help us trade and make some money. That's the 78% touch, possibly lower degree wave 2 in place. and the stop loss would still remain around 1.0177. All right. And is it something for the positional traders? We've been long and we are still going to be wrong. There's no change in the direction of the trade. So we propose another buy entry around the current price, which is 1.0260 something. Okay, and let me type in the first trade of this series. It's potential buy around 1.0260, and the stop remains at 1.0100. We are now in a position to revise the stop loss in the next cycle, not as of now. We would be in a position. Targets remain the same, sir. Targets will not change. 1.0750. All right. Now, for those who are joining fresh, this is an excellent opportunity to get on the long side. And those who've been holding long positions are still in a in a in a comfortably holding longs. Actually, we bought around the same price, wave two of one lesser degree. That's where prices are trading right now. So that's the first target, 0750, and possibly it's going to go towards 1.11. All right. The RSI has dropped a lot. Let's check on the 4-hour time frame. That's because of the price action, which is amazingly gapped down. And if you look at the wave structure, as what has happened, I can count 5 waves here. One, two, three, four, five. That is A. Three up, which is B, and then again 1, 2, 3, 4, 5, three, and possibly we are just about completing another 5 waves. So it's is it a zigzag? I think it's a good enough. It's a slightly steeper angle, but it's possibly a zigzag which is complete. Ideally, prices should have bounced right from the 1.0300, but it has taken a steep. That's okay, and unless so, the objectivity is unless prices break below 1.0177, should be good to remain on the downside. So, all right, and let's do the trend line. So we are right at the backside of the trend line test as well. Push above the sell zone and back into the buy zone would be confirmation. We are heading north from here. That could be one last best place to enter on the long side. Bottom line, the risk is at 1.07, 1.0175. All right, let's go back to the dollar index now. See, the dollar index chart is still following the script in a way that is carving a potential wave two right here. But I would like to go to the bigger picture first, as we normally would like to do on the first session. And what I'm seeing on the chart is a beautiful story of wave one and wave two. I'll bring it up just in a moment, please. And this is what I like about these fundamental triggers. They give us trade opportunities. And we will also touch base with the dollar Canada USD CAD. That is 5 waves lower, followed by a 3-wave rally. Exactly 61.8 pounds. There you go. So the bottom line for dollar index is that bears are going to remain or expected to remain in control till the time prices stay below 110.22. That is our stop loss is 110.30. It remains as it is. Now, the only thing that I am seeing on the chart right now very clearly is that we've got wave 1 of a lesser degree in place and wave 2 of a lesser degree in place as well. If that is being done correct, then the next wave is on the south side, and should be on the south side in a huge way. All right. In a big manner, I'm also doing a trend line. Let's do it on the 4-hour time frame. Let's see if there's a backside test happening. We've got two potential trend lines passing across. One is right here. I'm trying to touch this low without cutting a candle right across. That will not cut a candle. Okay. And another one could be down here. Is ideally not required, but let's keep it as it is. Now, if you look, let's not confuse. Let's eliminate the second one. Now, ideally that should be a back test, but it's almost there. So till the time prices remain in the sell zone of this trend line, I think we are in a very good position, a comfortable position to remain on the long short side, and in fact add further. So the hourly chart is now flashing up. That is 5 down. Would be minute degree and followed by 3 up. All right. So we were expecting 109 all through the past week, correct? And we were talking that third Feb convergence. We are approaching the beginning of the next week. So these are the times when major highs and lows would form, correct? That's what exactly is happening. The only thing is, instead of 109, prices have rallied through 109.50. That's the only change. So let's again bring that objectivity into play. 78% touch, it's a potential wave 2 of a minute degree in place, and the stop loss goes there. And we've got a potential sell entry. around, let's say, let's initiate fresh shorts again around the 940 50 zone. 110.30 would be the stop, and target is I'd say 105 for now. Let's also print the Fibonacci extensions. 104.86. That's pretty close to 105. So we are good with this trade setup. All right. Till the time we are below 110.30, we are good to remain on the short side. So, okay, gold. Let's bring up the daily chart first. And now the last session, that is the New York on Friday, we were we were drawing uh, 2820 levels, correct? The stop loss was at 2820. Prices rallied all through the 2817 and then reversed. So technically, okay, that is wave four and wave five. I'm going to bring this wave three up and let's change the degrees. All right. The third wave extended. No change here. So, so what we are seeing here as a potential wave story is an ABC in the making at minute degree. That should ideally be the story in the next several weeks, which could be unfolding. All right, that's a larger picture. We've got a diverging scenario right across the 4 hour time. That's a daily chart, sorry. So we've got a kind of diverging scenario on the daily chart, which implies a significance. That was a previous high, which was registered around the 2788, and that's a new high which got registered on Friday around the 2817 mark. So prices are reversed potentially with the diverging scenario. Let's go back on an hourly chart. What we see on the screen right now is a potential five-wave drop. Now there is only one story which which is now possible from on the worst come side on the worst scenario. We have first of all let's look into the trade that we have taken. Okay, so first let's book profits of the 2810 or 20 shorts that we were supposed to take or we've taken. So let's take that profit first. I would suggest, I'm not writing it down, but you can take those profits from 2810 shorts on Friday, roundabout at the current price. And remember, those who have we've sold it from 55, 65 levels. I think for those we still have nothing to do. Partial profits booked. We are still looking lower from here. All right. Now, uh, one more thing, that's a diverging scenario as well. You can see that on the hourly chart where prices rallied all the way towards 27, 28.17 and then reversing quickly. Okay. All right, sir. So what we are now facing here is a potential five-wave drop. If you want to see more clearly the wave structure, that is on the 15 minutes time frame here. Remove this, and you see that 1, 2, 3, 4, and 5. Now this is an indication of the beginning of a reversal zone because 5 is incomplete. 5 is the larger direction trend. So a minimum structure which is going to or which could be unfolding from here is a 5, uh, a 3-wave corrective rally if it wants to, and another 5-wave lower at least. That's the Elliot extension, which brings down prices to 27.54. And if we go back another hypothetical wave structure, then the next target for the fifth wave is supposedly 27.27. All right. So keeping these two figures in mind, our weekly target or our short term or the near term target in gold, we can devise on the, or we can print on the hourly chart as follows. So near term target at 27.30. That is where we are looking for the next wave around the 27.30 mark. All right. All right. That's the story for gold. Let's look